Welcome to the Transparent FX Academy. I'm Nick and I'm a top author on TradingView with over 190k reputation points. If you're new to the channel, make sure to subscribe. This is the place to be for high quality free trading education. Now, without further ado, let's jump straight onto the charts. In this video, I will be speaking about gold. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders to the COT data. So essentially what hedge funds and the big players in the market are doing and how they are moving their orders. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. Now, starting from the monthly time frame, what we can see is that we have a market which is currently testing precisely the quite strong level of previous historical resistance from which all these moves to the downside were created, which now that the market has broken it to the upside is now turned support and demand at this area. And as the market is testing this historical resistance turned support, we could expect some bullish price action to be created away from this level. We can also notice, if we zoom in, that from a pattern perspective, we have a very clear impulse followed by this correction. Now, in general, after an impulse, if you want to measure the correction, you have to take your Fibonacci from the low to the high of the impulse leg. And if we do that, we can see how the area that I have just identified as a quite strong historical structure level is the zone exactly in between the 0.32 and 50% of the Fibonacci taken on this monthly impulse leg. So a quite strong monthly support and demand area that we could in fact expect this market to reject to the upside. Dropping down on the weekly time frame, what do we see? Now, from a weekly standpoint, what we can notice is that in creating this retracement, the market is also heading towards a quite strong weekly structure level. In fact, this area was acting as previous weekly resistance here, turn support here, again here, and at the moment the market is about to test the exact same zone from which then we could expect some bullish price action to be created. Dropping down on the daily time frame, what do we have? Now, from a daily standpoint, this structure is quite clear. We have a market which at the moment is creating a high at this zone. Now, until the market will remain below this previous high, it can easily continue lower. However, since the monthly and weekly timeframes are bullish, this move lower is not really an interesting move because it would be a move inside of a higher timeframe support area. Therefore, things would only be interesting for me if the market would break back above this resistance. So in my opinion, only if the market breaks above this high, things would get interesting, because after a break back above the resistance at that point, after the break on the retest of the previous resistance turn support, that is where we would have good probabilities of seeing more institutional longing, which at that point would further increase the probabilities of a potential rejection to the upside away from this level. In fact, if we go into what we have when it comes to the commitment of traders, so the COT data, so essentially what hedge funds and the big players in the market are doing, and we check the data precisely for gold, what we can see here is that with the last reports, we went from having 71.4k net positions all the way up to having 179.8k net positions, showing how institutions have been increasing longs and decreasing shorts with the last reports, going from 220k longs all the way up to 262k longs from an institutional perspective, and shorts got decreased from 148.8k shorts all the way down to only 82.4k shorts. So institutions have been increasing longs and decreasing shorts on gold. Now, this means that from a technical perspective, if the market will shift back again to a bullish market from a technical perspective, and that would only happen with a break above this previous high, at that point on the retest of the previous resistance that at that point would be turned support, we have good probabilities of getting more institutional longing, which at that point in turn would further increase the probabilities of a potential rejection to the upside away from this level. So If we get the break on the retest, what I would expect in a situation like this? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data, those are the best timeframes from a directional perspective. However, when it comes to identifying early shifts in a trend of a market, the best timeframes for that are the intraday timeframes, so 4-hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish market to an intraday bullish market, at that point, I would expect a potential rejection to the upside for the market to complete this daily impulse correction and impulse pattern to the upside, and for the market to reject that confluence of support that we have previously identified on the monthly and weekly timeframes. Now, if you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website, which is linked both in description and in my bio. Here, you will have the possibility to gain access to the most complete, all-inclusive mentorship program. And in this program, you have the possibility to gain access to all my trading courses, the COT data software, the trading station software with the Telegram signals integration, one-on-one private mentoring directly with me. And if you continue to scroll down on the website past the testimonials, you will see that you have the possibility to join and gain automatically access with the email and password that you will create during the registration process. So I really suggest to go and check it out as soon as possible. The link is both in description and in my bio, and I will see you in it. If you enjoyed the video, make sure to drop a like and also let me know in the comments below any new pairs or topics that you would like me to cover in the next videos. And I will see you in my next breakdown.